Welcome to this morning's Q&A with Ask DB. First of all, I want to say thank you guys who have, decided to join this challenge. I think this is a super, super dope opportunity for those who really be open to this kind of line of trading. You've been seeing the videos, you've been, hearing me talk about it. I know that some of you guys have been on my DM asking me questions, emailing asking questions. And so I wanted to take an opportunity to be available for the things that are, that's pressing on you the most. So this is your time. This is not really a presentation. This is just me saying, hey, I know it's coming up. You guys are gonna be in the 20th class. So I want you to fire away and tell me what's on your mind. What do you want to know? Let me check on the chat and see if anybody asking anything. Okay. It's better if you guys, you don't have to put your face on camera, but if you could just unmute yourself and say what you got to say. It's hard for me to read the chat and communicate with you guys. And I want to be able to have a focus. So just say it with your chest.
All right, I have a question. Hey, good morning, everybody.
Hey, what's up, Monique?
Hey, so my question is, I've been trying to figure out, I don't understand the candle thing. So like when you be making them videos and you be like, okay, I'm in at this point, like let's say the market is at, and you like, all right, I'm trading a little bit and I'm gonna go in at 21.16. And then you be like, okay, right here, I got 2 points. Like, I don't get
it. Right. So I know you don't. And so I'm gonna try to break it down. That's why we're here. So you're gonna get it broken down into the challenge, but to lower your wondering, whenever I'm saying I just got in at 22.20, that is the price at that moment that the transaction, oh, 1 second, I don't know what that is right there. Hold on. That price is not going to stay there throughout the day. It goes up and down because people are always coming in and out of the market, buying and selling. So we're on indexes, right? The 4 major indexes. And so if you're ever watching the news and it says the Dow has moved this many points or the NASDAQ has moved this many points, those are the numbers that we are looking at. So when I come in at 22.20, that's the time that I bought that contract. And if I got in believing that the price was going to go up, then when it goes to 21, 22, 23, 24, we are making money along the way. And then when I say I'm moving and scalping points, what I'm doing is as that price is going up, I'm following that price and capturing the profits before the sellers, because if you're buying, the price is going up. So if the sellers start pushing the price back down, we've already captured our profits. That makes sense? Or make a little bit more sense?
It makes a little bit more sense, but of course I'm still hella confused. So
come on.
So when it's the candle, okay, so how do you know? So you never know when it's gonna stop, but you be saying like if the market is like a minute left or 2 minutes. So you do know when it's gonna stop?
Okay, excellent question. So we trade on 5-minute candles, right? So every 5 minutes, the candle is going to change a new candle is going to form. We don't know if it's going to change or not. So when you look at a chart and a new candle forms, it's going to be, that candle is going to do what it's going to do for 5 minutes. It's going to go up, down, or it's going to oscillate back and forth. So I'm always looking at the time because it's every 5 minutes, like, synchronized. So it's 6:30, 6:35, 6:40, 6:45. So when I'm looking at the clock and say it's 6:38, I know in the next 2 minutes, a new candle is about to form. And because I never know what direction the market is going to go, I'm conscious of that new candle forming. What drives the direction of the market is the buying and selling, period, right? It's not like it's a video game. These are actual people. These are actual transactions. Millions and millions and millions of transactions are happening. And depending on who's dominating the price, whether it be buyers or sellers, will determine which direction it's going. So when I say we had 2 minutes left, I'm talking about that's how much time it is before the next candle forms.
Okay, got it. And so then you want to be out or already had settled before that next candle forms.
Not necessarily. You just want to be mindful, because so as the market is going in whatever direction and new candles is forming, each candle is a new opportunity for it to go up the way that you were going, whatever direction you got in at, or for it to reverse. You hear me say reverse a lot. So reverse means basically it's turning around. So what does that really mean? Buyers push price up. So the market is driven by fear, right? And greed. Those are the two main emotions. So when people are scared, they start selling. So imagine you own Southwest stock, right? And then Southwest plane crash, right? You start thinking, oh, this is not good for Southwest. I'm about to get rid of this because I know it's not about to be worth what I paid for. So you start selling because you believe that the price of that airline is about to go down. Or you hear about your stock, you got Southwest, and they just bought luxury private jets. And you like, ooh, now that's right there. They didn't did affordable luxury jets. You like, that's nice right there. Let me buy some more of this because I know it's about to go down. So you start buying more. So when more people are buying, price goes up. When more people are selling, price goes down. All we care about is identifying which way it's going, because we're not holding anything for any period of time. Get it?
Clarity. Thank you.
You sure? I know you got more questions, Mo. Come on.
Of course, but I don't want to take you. Listen, this ain't a one-on-one, so
okay.
I don't want to hog the questions.
All right. But you may be asking, other people might be thinking the same thing.
An example?
Huh?
Can I ask a question as an example? Something Absolutely. That I watched this morning.
Okay.
Nike has a new release tomorrow with the Jordans. So people are buying, right? Because we know that people are going to stand in line and get these brand new shoes tomorrow morning at 7 o'clock.
Right.
So a lot of people are buying, but after it's likely to go down because now they've made their profit on this new shoe release. Is that the way to think of that?
Similar, but not quite, because they're buying the product. So the product will increase their sales, but this is more directed if everybody was going to buy Nike stock. I might not go out and buy Nike stock just because they put out a new shoe, but I might go buy Nike stock if they come out with something that's like revolutionary, that is a game changer. And now I believe, the company is about to take their game to the next level. You know what I'm saying? So it needs to be something that's going to make the company be better, or it's something that people fear is going to make the company worse. Because here's another way to look at it. People
so a direct business impact.
Yeah, because people who own stocks own shares in that company. They've invested in that company, right? So they are emotionally attached to that. As long as the company is popping, they ain't tripping. But you know what I mean? So, but if they hear something, they think that the company's going to lose revenue, then people might tend to sell. Not everybody, because seasoned investors buy actually when the price goes down. They look at it as a discount. But remember, just for clarity, we're not trading stocks. That was an analogy to give us an idea of how the market movement is, right? But what we want to keep in mind, we're trading futures, future contracts, which is basically an agreement, right? That you're buying something now with the ability to sell it later at a different price. Now, you may not fully grasp futures, right? But think about the old school movie Trading Places, right? They were trading futures and commodities, right? Pork bellies and orange juice and things of that nature, right? There's commodities, oil, things of that nature that every single day, right? People are buying and selling. We are doing securities, basically, I mean, equities is what they call, right? And basically that's attached to the indexes. So what I love and why I chose this style of trading is because I didn't want to have to worry about a variety of different stocks, because that could be mind-boggling. A lot of people day trade and they are researching such stocks every single day, because there's people who like trade Tesla every day. Like they just day trade Tesla the same way I'm trading these future contracts. They wait for some news to happen or whatever, and they start, day trading. But all stocks move throughout the day. The simplest form to think about it, no matter what stock you're talking about, all stocks move throughout the day. And people sit back and they observe and they find entry points to get in and spaces to get out. And in its simplest form, that's what we're doing. We're like price action traders. We are just watching what's happening, identifying which direction the market or the index that we're on for the day. All right, I got you next, Dre, right? For the day. And then we are getting in where we fit in. And then we in and out like a robbery. That's it. Like that's the whole scheme. Dre.
Can you hear me?
Yes, sir.
All right, so look, this question goes to like, so how do you know what contracts to like bid on or to invest in or whatever, or to pick? Because like you say, it's so many different contracts. You got different commodities and whatnot. So how do you know exactly which one? So when you be going on there and you be like doing the working with the candles or whatever, I never know exactly what you're trading. All you say is that I'm trading these contracts. So how do you know what contract? Do you just study it? You just study the market before it opens up, because they got a pre-market as well. Do you study that before it opens so you will know exactly going into it what you're going to invest in and what not to?
Excellent question. That's why I love this type of trading, because you don't have to, the contracts that I'm trading is depending on the index that I'm on. So you notice that most of the time I'm on the Russell 2000. There's 4 major indexes: the Russell 2000, the S&P 500, the NASDAQ, and the Dow Jones. You're going to get all this in the challenge, right? This is just a little warm up. This is pregame stuff. So when you decide, and each of them move differently, you're going to get a feel for which one works best for you. The NASDAQ and the Dow Jones, they're very volatile, but they move a lot. Like the Dow can go up 800 points in a session. The NASDAQ can do the same. The S&P 500 and the Russell 2000 don't move like that. They more good for 40, 50 points. I like it because it doesn't move as fast. So I don't have to actually feel like I'm on edge every second of the trade, because even if it goes against me, it's not running against me. It's like walking. But the NASDAQ could turn around on you and go back 30, 40 points. And that's a little bit more challenging to manage, but it's all doable. So directly to your question, Dre, when you pick the index that you're going to trade on, and I'm going to show you how to set that up, that's the contract that you're trading. And each one of those contracts have a fixed value, right? So we'll cover this in the challenge, but I'll give you some insight. So there's 2 ways to trade. You can be on what they call the E-mini or the micro E-mini. And the exciting thing about this, the micro E-mini just got here in 1999. So it's brand new. And it's the first time that they made it very affordable for everyday traders like you and I to trade without having to risk a lot of money. So the micro, the Russell and the S&P 500, those contracts are $5 each. The NASDAQ contracts are only $2 and the Dow is 50 cents. Now remember, you can trade as many contracts as your bank account will allow. Now we'll get into more of what it costs to be the boss in the challenge, but I'll give you an example of what it might be depending on which brokerage you choose. So let's just say you're on the micro and you want to trade a $5 contract. Now, remember I told you that Tastyworks has a minimum of 2,500. I actually think it's 2,000, but 2,500 is what I recommend. I started with 2,500 there when I first started. So I think that's what it's at. So we trade on margin requirements. So in its simplest form, again, because this is not the actual class, but to put it in relative so you can get an idea on it, the margin requirement for that $5 contract might be 500, right? So for every $5 contract you want to buy, you got to have 500 in your account. Now, what does that mean? So it means if you buy 2 contracts and you have 1,000 in your account, when you take that trade, as the trade is working in your favor, it keeps adding $10 at a time to your account. If the trade is going against you, it's taking the $10 from that 1,000. Okay, so it's like fair exchange, no robbery. So the $10 is leveraged against $1,000 in your account, but it only goes up and down based on how your trade is going. So that's why we teach the risk management, high probability trades. This is where all the skills come in at. So you're not overly concerned and it gives you time to leverage it. And then the more money you put in your account, obviously the more you can trade. Now, the bigger account where I'm at has more of a requirement, but you can imagine what it might take to do that if you want to trade $50 a contract. And so we'll get deeper in that into the challenge. What I love about this, well, first thing I'm going to say this, and I'm going to say this throughout the entire challenge. As an EI day trader, or whatever you decide to represent, I just say EI because the thing that's going to make this program different than anybody else's is that it's rooted in emotional intelligence. I promise you guys, on everything that I love, you are going to be your worst enemy in this game. It's going to be based on how you feel about money, how you respond to losses, how you respond to feeling like if you're wrong about something. See, some of you can't even stand to be wrong. If the sight of being wrong about something messes up your mojo from the gate, I got to coach you through that because you're going to be wrong. You're going to get into a trade and it's not going to be the right time. And if you are somebody, if that bucks up against your belief, then it's going to make it more, you're not going to have a clear mind when it's time to trade. So my goal as your EI coach is to make sure that you keep your eyes on the prize and your head on the swivel. Like, I'm not going to let you go there, but it's totally up to you. But I know because I've done it, right? And I'm the EI guy. You know what I'm saying? So I know how I got here, what I had to go through, baptism by fire, what I had, the tuition I had to pay. Because when I lost money on my way to this journey before I came profitable, right, I gave up money. But when I look back and reverse engineer, it was all on me. The market didn't do nothing to me. I went against everything I learned. I kept trying to make stuff happen. I didn't have patience. I just, like we do. We just try to do shit on our own. And I'm saying, you do that, you're not going to be able to look back at me and say, this didn't work. It's going to be all on you. And you're going to be clear about that by the time the challenge is over. Because I'm going to give you everything. And today, Matt, probably tonight or by the morning, I'm going to send you guys a video specifically on the scalping strategy. Up into the challenge, I'm making, you can call them tutorials. I'm going in depth. So I'm pausing on, the videos. Okay, this is what I did. This is what I made, because that's just the reason why I did it that way. Because I know that we operate off results, right? So I wanted to be a results driven conversation. So you can see, one, can you imagine yourself doing it? And two, you can see with the potential. But remember, every time I trade, whatever number I show you, that number could be 10 times as much or 10 times as less, depending on how many contracts you want to trade. My thing is to give you the best perspective in the most simplified, straight version way to get it done. And so that's why the EI is important. When it comes to this day trade, I believe anybody who wants to do it can do it. But you have to look at this as a skill. And what I was getting ready to say before I got lost, before I jumped on the stool, you know, I get on a soapbox and get to talking, right? What I was about to say is you got to try really hard not to focus on the money. You have to focus on the process. You have to focus on the skill. And the way I'm going to teach you, if you do that, you increase your chances of being profitable. I'm not a financial advisor. I don't play one on TV. I can't promise you're going to make any money. In fact, I know you're going to lose some. But like I said, managing what you lose and maximizing what you pick up is the name of the game. But when you hear me talk about losses, if that puts butterflies in your stomach, you're going to need some additional coaching, right? I got to get you away from that. Okay, because you're gonna take loss, but it's not loss like you're like a total loss. You just lost for that moment. You were wrong about that trade. Mr. Sullivan, come on in.
Good morning.
Good morning, sir.
Hey, I just wanted to ask if you could talk about scalping, scalping points, and then starting up. I don't know if you're on the same candle or if a new candle started. Can you just talk a little bit about scalping?
Absolutely. And again, you're going to get more about this. I actually made a video this morning specifically for you guys, not for the public, that's going to talk in depth about it. But basically, scalping is a strategy where you take small profits, right, in the market as they're developing. Most people buy a commodity, an equity, or a stock, and they hold it for a period of time. While they're holding it, the price is moving, but they're not looking at it. They're looking at it at a later date, right, to benefit from the time that they purchased it. Swing trading is something where you buy something and you're going to look at it at the end of the day, maybe, or in a couple of days and see if the price moved. Scalping, right, we on that thing like a spider monkey, right? From the time that we watching that thing, because as the profits reveal themselves, we like this, let me get that, like run that, because we know the market is very volatile. And I am trying to create income for myself consistently. So over the past 2 years, I've been studying the markets. Obviously, the pandemic is what made me think to pivot. And I studied options, studied swing trading, studied crypto, and all of that stuff. Did a little bit of it all, and it was cool. But my personality type is like, if I'm gonna get involved, if I work today, I want to eat today. I want to know my results today, right? That's just me. So that's how I got to this point here. And then as I start dialing down of all the different ways to trade and what it take, I'm talking about hours and hours of research and books and books and books, because you got to filter to all the noise, right? Because a lot of people scamming, a lot of people make it. I'm not selling no lifestyle. That's not what I'm doing. I'm not saying we about to get the house in the hill and own windmills. I don't know what you're going to do with your money. I'm saying this skill, this knowledge to be able to pull up a chart, read it correctly, and identify, because there's billions of dollars like this all day, every day. When that bell ring, ding, 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 it's popping, right? It's like transactions going up, transactions going down. And we like this. Oh, that's where y'all going? All right, I'm gonna roll with y'all for a second. All right, I'm getting out this light right here, and I'm taking my stuff to the side. And I'm gonna get in, I'm gonna get out and get on about my business. Now, I know some of you are not gonna be able to handle yourself. Y'all gonna have some good days, and you're gonna be dancing in the market all day and all that kind of stuff. And that's gonna be on you, right? Training wheels is off at that point. I'm saying what I found to be the most profitable, get a little bit and get out the way. Don't get consumed with it. And as you get better with it, instead of trading more, you increase your contract size because the trade is the same. So $1,000 trade could be a $10,000 trade, could be $100,000 trade, or a $10 trade. That's up to you. But if you get good at the trading, then that's where to me, the magic is at. That definitely was a long response to a short question, but that's how we roll. Anything else, Rick? Or did I answer your question? You still muted.
Absolutely. You answered it. Yeah, thank you.
Okay. And again, be looking for the link later on, no later than the morning, where it's going to be a video specific to you guys about scalping. And I'm going to walk you through the trade I took this morning, when the bell rang, what I looked for, how I looked at the candles, why I didn't get in, because this morning's trade, I waited 14 minutes before I got in, right? And that was important. And that happened because I could look and see this, because candles tell a story, right? This is what we're going to learn. And I was able to determine it ain't a good look right now, right? And then after 14 minutes went by, there was an opportunity, it was a good look. And in 7 minutes, I was able to get $895. But that requires patience, right? You can't have FOMO, right? The fear of missing out, because that'll happen. You'll see a candle get to moving, and you be like, oh, if I don't get in, I'm gonna miss out. That's why I say we trade with logic, not emotions. Emotionally, yeah, you want to get in, but logically, is it the right time? Because one thing's for sure and two things for certain. There's gonna be an opportunity in the market because there's too many transactions going on. You just gotta wait. And then there will be rare days where, although there's opportunities, the window is too tight. As soon as they buying, they selling. As soon as they buying, they selling. And that's what we call consolidation. And it's like a sideways channel. We don't want to trade in that because it's too tight. As soon as you get in and out, you be like double dutching, like, am I in and out? That just make your nerves bad. You want to wait till it's clear. Is you going up or going down? And it's obvious when it's happening. It's like, it's right there. Like, you won't have to guess. And it's going to be everything about yourself, your emotional intelligence, your discipline, your patience, all of that stuff is going to come into play. So I'll pause unless somebody else asks a question.
Okay, I have another question. So okay, I had a question and I lost my train of thought, but my thing, so when the mark, so you know how like it's hella candles, it's like a whole row of damn candles, they red, they green, they red, they green. How do you know which candle you paying attention
to? The last one.
So it's always the last one.
Yeah, so that's actually a question. So you won't, when you open up your chart, you're gonna see the candles stop. They go all the way to the, if you sit in front of your chart, to the right, and they'll stop because the next candle hasn't formed yet. The candles you looking back to the left have already happened. That's past time, right? Okay. So we use that as information of what's been happening. In this same game I'm teaching you guys, you're going to use this same game when you are actually buying stocks, right? Like when you decide you're going to start buying stocks and things of that nature, you're going to use the same game. After you go through this challenge, you learn, take a deeper dive into technical analysis. You won't just buy a stock blindly because somebody said buy it. You will know how to go look at it, see the price action, see where it's been, how it's been performing, and take into consideration, is this the right time to buy it? See, a lot of us get in late to the party, right? We hear by the time we hear the news, the stock is already up at what they call resistance, right? There's support and resistance, okay? That's all the stuff you're gonna learn in the challenge. So, so don't be like, okay, what is all that? But those are areas, those are buying and selling areas. So what we are always doing, we're using our situational awareness, right, as an emotional intelligence term, to be able to always understand the movement on our chart based on the price action. Price action is the only real truth of the value of what's happening at the time. And the past candles and the indicators that I'm going to teach you about gives you the information so you can determine which direction that this is going. And the beautiful thing about this, I seen you, Dre, a beautiful thing about this, the market only goes 3 ways: up, down, and sideways. And we don't trade sideways. So the beautiful thing is not, right? It's just 3 ways. And all we have to do is use the information on the chart to make the decision to decide which way we want to go. Dre, you had your hand up?
Yeah, you kind of already answered it though, because I was gonna ask how you know when to get in as far as like the trend that's going. Like I've been studying the charts and trying to get on this technical analysis, right? And it come to a pivotal point where it might have like so when I understand with the contract with futures, you can bet, you can like I don't want to say the word bet, but now I guess for lack of a better term, you can bet with the market or against it. Sort of like if it's going down, it's a downward trend, you can bet with it. But when it reverse, how you know when it's gonna reverse and start an upward trend or what have you, and when to get in and when to get out.
So you never, right? So I'm gonna give you the finite tools and the training, but you never really, the simple question is, you never really know. However, the indicators, each indicator will give you a hint, if you will, that the momentum is changing. What do I mean by momentum? It means that if it was a buying moment, if a ton, because we're going to look at on the chart, there's a part where you look at the volume, right? And you can get an idea of how many people are buying at the moment. The indicators will tell you when the buying is slowing down. So you will start to know when it's time to get out. We manage the trades along the way. But for beginning, the first thing I'm going to teach you guys to be super, super nice with is scalping 1 point, right? You're going to have one job, right? Get 1 point, right? That's what I'm going to teach you to do. Because if you can get 1 point, you can get 2. But it's like the Martin Luther King quote, like, we're not going to look at the whole stairwell. I want you to take the first step, because building your confidence, because like I said, the thing that's going to hold you back is going to be yourself. Because sometimes you're going to know exactly what to do and you're not going to do it because you're going to have fear. You're going to have anxiety. You're going to be like, what if it turn around on me, right? And that's where we got to use our EI. And all of the strategies I'm going to give you is going to be all from my professional experience and my personal experience with this. And everybody on here, most people here know me, and either personally or been around me long enough. You know that I'm gonna give you everything that you need. I would not be doing this if I didn't think it had a benefit to you, right? I remember somebody said, someone was like, man, why if it's so good, why are you sharing everybody? You right, I could be doing it myself, right? Like most things that I do, but that's just not my spirit. Because I was raised in a time that when I eat, the people around me should eat. It's just been embedded in me. The more people pushing the wagon, the harder it's going to roll. And so a lot of people talk about, how we going to help each other, how we going to help the community, this and that. I'm saying, and I'm not knocking how other people do it, but if you can teach people how to fish instead of feeding them fish, this is something that when you get it, then your tribe, you can turn around and teach your tribe. Right? Your kids, your cousins, your aunties, people who can't get out back in the world, don't know what skill they want to do, don't want to go back to school, whatever, boom, you could be like, you know what? Let's put some money together and leverage that money to start increasing our income on a continuous basis. It's just an idea. And as you make the money, then what you do, you could turn around and put it into longer term investments. Take something to expand and enjoy, and then put some more in the longer term investments. And now you're growing your accounts off something that can't nobody take away from you. That's the most exciting thing to me. Like once you get it, you can't unlearn it, right? Can't nobody come get this from you. So you could be anywhere, any point in your life, pull up your laptop and be like, you know what? Let me see what the market is doing. Like that video I sent the other night. When I was at the chair, I like to sit, in my living room on the second floor, don't have no TV in it, don't have no lights in it. It's got a library and a big old picture window. So when it get dark at night, I like to sit in the window and just be at peace, right? And let the fireplace go or just be. But something said, pick up the laptop and see, because I never really look at the after hour market. And I was able to open the laptop, see a trade folding, get in and get out and get like $115. I only traded one contract, but that could have been $1,000. It could have been whatever. And I just get excited about the opportunity to do that almost, you know what I'm saying, at will. And where else can you do that? You know what I mean? And what we're doing right now. So anybody else? Come on, Erica. Come on in.
Hey,
Hey.
when you said when you pull up your chart, so is this software based or is this internet based? Do I need to purchase some software to be included on this, or do you just jump on the website, or how
Yeah,
does that
Tasty.
work?
So Tastyworks is going to give you a downloaded version of their platform. You can do it
Okay.
online, or you can download it onto your computer or laptop. And then that's what you're going to do. You're going to open your brokerage account, you know, basically like you open up any other app. And then the chart's going to come up. I'm going to show you how to set up your chart so it's already set up every time you go back there. And then you just sit and wait.
Okay.
You know what I mean? Sip on your tea
Yeah.
and wait for an opportunity.
Yeah. Awesome.
Yeah. Thanks for the question. Anybody else?
DB.
Yes, sir.
So like you mentioned something about indicators, right? Do you have a paid indicator, or you use an indicator that come with the with what you use?
Tastyworks.
Yeah, Tastyworks.
Yeah. So Tastyworks. So these indicators are free, right? They're on any platform that you go to. I know that there are people who sell these indicators. I don't know if it's necessary that you need it, but I'm also, which I'm gonna tell you guys in the trading, the thing about the financial market is vast, right? Like you can get lost in the sauce. You can go down a rabbit hole quick. And I have just figured out a very simple way to make it happen. So no, I don't pay for any indicators. I don't need anybody to give me buy and sell signals and all that kind of stuff, because it's all derived from the same bit of information, price action, what's actually happening. And so all the indicators that we need, they come standard in any brokerage that you use. And we don't use a bunch of them. Because if you go start looking at people trading, they pull up their charts, that shit look like they're trying to make a Picasso painting or something. It's, you know what I'm saying, shit everywhere, right? We don't do that. We keep our charts clean and straight to the point. We ain't trying to look like we doing something. We trying to actually do something.
DB, one more question. Cashing out, does the brokerage keep the money, or is it like in your account? Is it you have an account with the brokerage, or is it linked to your bank account, or how does that work?
Excellent questions. Connected to your bank account. So the money stays in your brokerage size until you basically transfer it over. So the same way you're gonna transfer it in, the process is simple. You just transfer it out. You go to the website, you log in, you go to accounts, you push withdrawal, you say how much, you push play, and it's like an ACH transfer.
Okay,
right?
but
So
you
at
always
the end
want
of
to keep like a good cushion in there. Like you said, you have to have a margin, right?
Yeah.
So you don't want to be pulling it out and messing up your margins and stuff, right?
I don't recommend that, right? I recommend that pretty much, you know, in the beginning, you just want to kind of just get a feel for what's going on.
Yeah.
And once you feel like you got a feel, then you would probably either fund your account to where you really want it, or you might even grow it as you're learning. I see you, Tammy, give me 1 second, right? As you're learning. Then when you get to a point, so what I do at the end of the month, right? I just pick a random day. I go back, because you're going to get daily statements from Tastyworks, right? Or whatever brokerage. And it's going to tell you what your profit and loss is for the day, for the week, or whatever, you know? And so at the end of the month, I just look at what my profit and loss is. I look at my profit, and then I decide from that profit, right, how much I'm going to move back to my account. Get it? So I don't touch my bases.
Right.
But you only cannot touch your bases if you're being good, because you might be below what you came in, which all of you guys are going to have that learning curve.
Yeah.
So that's why the number 2 rule that you're gonna learn in the challenge is don't come over here with scared money.
Right.
Don't come over here with money that you like, oh, I'm gonna need this to do that and that, because you're setting yourself up. And I'm being very straightforward to you. Doesn't mean you can't learn right now and come back to it later, but do yourself a favor. This is not the come up series. Don't go borrowing money from people. Don't be like, hey, I'm about to do this thing. You want to end? No, don't pull any money, because if you blow your account up in your learning curve, I don't need you, you know what I'm saying, like losing your shit. I don't want you to give your life up, you know what I'm saying? So you put something in there that's manageable, that gets you started. That's why I said, don't focus on the money, focus on the skill. Focus on being a damn good scalper, and your results will see itself. It's like somebody who goes work out for the first day, then you go to the mirror.
Right.
Ain't nothing happen, player. You know what I'm saying? You got to get back. But if you keep working out every day, right, consistently, then one day you walk by the mirror or you go outside and somebody go, damn, boy, you damn girl, you looking good. You're like, oh, thank you. I've been working out, because you've been consistent. So this is about being consistent with a skill that's going to pay you out if you do it correctly. Miss Tammy, you got your hand up.
Thank you.
Yes, thank you. I think it was Andre, he answered it about the indicators, but then I did have another question. I'm trying to figure out the brokerage and how do you choose them? I mean, is one better than the other? I heard you talk about Tastyworks. Is that just the platform that has the indicators? Because you're saying they're free, so is this all on this platform for you?
Yes, every brokerage will have their indicators. So there's a lot of brokers out here. Just on my journey, I came across Tastyworks. I like how user friendly it is. I like the fact that you can get them on the phone if you get stuck, you've got a question. They handle things, you know what I'm saying, in real time. They don't have any hidden commissions and fees and all that kind of stuff. There is another, I haven't researched it, but there are 2 other brokerages. Matter of fact, one, I'm not going to recommend the other, where you can get in for lower margin requirements. So like if you don't have 2,500, they have them, we can get in for like 500, but they got licensing costs, they got commissions. So it's give or take, whatever. I'm not on those, but I feel obligated to research at least one for the person who really, really wants to get in, but feel like they don't have the minimum requirement. And I just want to make that option available, but I won't be able to vouch for it. If you're on Tastywork, you're on the same thing I'm on. So I can answer more questions, right? But you know what I'm saying, and soften any learning curve, because we're doing it together. And that's just the bottom line. But when you go to another brokerage, I'm not going to take the time to try to learn your brokerage. But some people are going to trade within the brokerage they already have. They may find out they can do the same thing. The setup is what you're looking for. I'm going to give you a trade setup, the combination of indicators, how we use them, and everything that goes around it. You can take this game wherever you go. So it's not unique to Tastyworks, right? The only thing is unique is my style of training that I'm sharing with you, that I think that'll be a benefit to you, which is why I put this play together.
I got that. So with that was great. So the question still stands, is that the brokerage Tastyworks?
Oh yes, I missed that part. Yes,
okay.
Tastywork is the brokerage. Sorry about that, sis. I missed that.
Thank you.
Anybody else? Rick, come on in.
Yeah, when the money goes into your brokerage account, is it taxable there, or is it taxable in both after you move it and in the brokerage?
Yeah, that's a good question. I'm not a tax advisor. This is my first year, so I don't know how I'm gonna get taxed all this money I'm moving around. That'll be in the advanced course after I get stung, because I don't know. But I would imagine that it's going to be added to your personal income. right? I would imagine that you're going to basically, as your personal income, you're going to add it to it. So however your personal setup is or whatever, be an entrepreneur, obviously I got write-offs and things of that nature, but I believe, and there's a little, I'm going to cover a little bit about that I read off Tastyworks of how it kind of moves, but I'm not prepared to take a deep dive into it today. But I will give a little bit more insight, but you definitely will have to consult with your tax advisor, right, on this. And again, for those who came on late, I am not a financial advisor. I got to keep saying that. I'm just spitting game. I'm sharing something with you that I learned. Do not try to hold me accountable for whatever happens to you after you learn this, because it's going to be on you. And I got to keep saying that, because some people coming into the game and you're going to look for somebody to blame when you have to blame yourself. You know what I'm saying? Because it's you is the one who ultimately pushes the button, right? And I am just giving you all the information, the skills, the knowledge, the experience to go, this is the better time to push it than not. And when you push it and it's not going the way that you want to go, use your EI and get out of the way and wait for a new opportunity. Because I guarantee that some of you are not going to get out, because you're going to be trading on hope. You hope it turn back around and you're going to get stung like I have, right? You're going to pay your tuition, and that's okay, right? Because anytime you give up a couple of dollars, you just paying a little bit of tuition. That's how I look at it. We're going to go Rhonda, then we go back to Suzanne. Rhonda, you're up.
I was just going to bring up the fact about taxes, because I sent you and Tammy a message because I knew it was going to come up. People have to be very careful when you set up your brokerage account. You can set it up as a margin or a cash account, and it keeps track of your wins and your losses, and you will get, I believe it's a 1099 at the end of the year, but all through the year, you can look at what you're making. So if you're making $1,500 a day and you're pulling it out, you're going to get taxed. You have to think about it. You're going to have to pay that tax. So people forget about that. They think they can get away with it. Don't get in trouble with the IRS trading stock, because it can happen. And they keep very detailed reports, and it's right there in your account. You can see it and you can look at it and look at your losses and look at your wins.
Right.
That's all.
Thank you. So basically what's being said, you're not flying under the radar. Everything that you're doing, Tastyworks or every brokerage are recorded, but just like anything else, right? You work for somebody, you do something, they give you a receipt at the end of the year, like what you made. So it's going to be the exact same thing. So you're just going to take that statement with the other statements that you got and give it to your tax person and bucket up against your write-offs and see what you come out with. It's the bottom line. I think the most important thing is to be prepared to pay taxes on it. So the discipline would say, if I make 1,500, let me take 20, 30% of it and just put that to the side. And now I got whatever, 1,300, whatever the math is. I don't know what the math is. But that way you just kind of get ahead of the game, but, we all grown, like you all been dealing with taxes, you know what to do. You know what I'm saying? Like, come on, we're not 5. Like, you guys know, if you make money, you're going to have to be responsible for it. So just don't try to be evasive. Don't try to be on the under with it. You just got to be, if you're going to make money, they say it costs money to make money, right? So you're making money, you're going to pay on it. So we look at it that way. All right. Sorry, Suzanne.
Thank you. I have a question, and it really relates to our EI skills that we've been learning. I have been following you. I noticed that you get up really early in the morning, you meditate, you take a walk, things of that nature. I do the same. Do you choose to, log in so early in the morning because it's beneficial to the market, or is that just an EI strategy? Could it make more sense for someone to get in, later in the day, because everybody's not a morning person? So.
Excellent question. So I've been getting it before I was trading. I always got up at 5 in the morning. It was just, success books that I read and all that kind of stuff. I just feel like when I try to get up earlier than everybody, I just feel like in my personal thing, it just gives me the kind of the edge up, right? Like I get things in before most people get their day started. As you get into this trading, you will see this particular, another reason why we like the future contracts is because they trade 23 hours a day, 6 days a week. So you can trade overnight, you could trade after hours, you could trade later in the day. Here's going to be the significant difference: the volume of trading at those particular times. So basically, if you're on a morning shift and that's the most popular shift, that's where you're going to have high volume, high liquidity, right? Meaning when you buy a contract, there's somebody always there. You know, you sell a contract, there's always somebody to buy it. You're ready to buy one, is one somebody always ready to sell it. Very, you know, so in the morning is when it's popping. The bell ring, everybody up, that's where it's happening. Towards the afternoon, right, it starts to taper down. But then you have a lot of traders who like to come in the evening. You got traders who come in late evening and overnight. So you'll start to get a feel for what you're doing, and you will adapt a different style of trading. So you might scalp, right? But you might move into a swing trader where you like, you know what? I'm gonna take this same skill and identify where I want to enter at. And I realize that this is a bearish moment or a bullish moment, and I'm gonna let my thing ride right throughout the night, and I'm gonna come back in the morning, right? Because overnight, the points move. So like when I got up this morning, I think when I looked at the Russell, it had moved like 25 points. So say if I had got in at any point, any moment at the beginning of the opening, then even though it did this all through the night, by the morning it ended up with 20 plus points. So I could have got 20 points while I was sleeping. So you're going to, as you get more familiar, you'll find a rhythm and a style that works best for you. And you'll know that when we start talking about your trading personalities, right? And how you probably look at things and what might be best for you as well. So we'll get into that a little bit in the challenge as well. Did that answer your question?
Very, very much. Thank you. I appreciate that.
Thanks. I appreciate that.
Because I think we need to figure out what time of the day best works for us. I'm an early morning person, but sometimes when I'm travel, it just doesn't, the timing may not work out. But I notice you travel too, so still trying to figure out what a good time of day to get in for me might look like.
Yeah, I take my laptop with me. If it's a trading day, laptop coming with me. You know what I mean? And if I got a moment, I'm popping it up to see. You see me trade at the airport. You see me trade in different places. But the first thing you got to look for is just the volume, right? And how much movement is happening. But the morning time seems to be the best time because it's just when the markets have just been traditionally, that's what everybody, that bell ring, ding, 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 ding. And it's like, horses coming out the stable, everybody putting their money to work. And it's just, it's driving the price action one way or another. Tammy, you got your hand back up? Or is it the same hand?
No, yes, I do. I want to piggyback off of her because that was my question. Is
I get you, Anita. I didn't see you. Go ahead, Tim. I'm sorry. Go ahead.
Okay. No, I said I just wanted to chime in on what she had said. When does it open? Because I see your videos and that you go first thing in the morning. So is that when it opens? Like early in the morning, 6 o'clock, 7 o'clock, I guess?
6:30. The opening bell is 6:30, but the future markets, they close in the afternoon around 3-ish, and then they open back up after. And again, this is East Coast time. I'll have the specific times in the challenge, but the futures will come back. The main stock market shuts down overnight, but the future markets stay open overnight. But to simple question, 6:30 a.m. is when the main market opens, but you will see price action and movement happening on the platform, on the indexes that we are on, because they've been open since the day before.
Gotcha. Thank you.
All right, Miss Anita, and then Pierre. I can't see you on the chart, Miss Anita. I seen your chat, but I don't know if you was able to get on. See if I can. I think I keep trying to promote you to panelists, and then you might be denying it. Let's see if we can get you on. There you go. So I'm gonna go Anita, and I'm gonna go Pierre, and I'm gonna go back to Dre. You gotta unmute yourself.
I'm sorry.
It's all
Hi,
good.
everybody. Thanks, DB. So I've heard you mention a few times, well, I've heard a couple people mention a few times that this $2,500 number, and perhaps I missed that, but is that kind of the starting point that we should plan to jump in? Because, I funded the account, but I didn't put $2,500 in there. So I'm curious, like, am I in the right space, or,
So, right. So you want to be able to trade margins. So you have to make sure that you sign up for a margin account, and a margin account is going to require you to have 2,500, because that's what allows you to trade these contracts. You can't trade these contracts on cash accounts. You have to do them on margins.
Okay, got you.
Right.
Got you.
So the 2,500 is like the minimum to allow you to get a contract on the micros, where you can start to practice what we're doing.
Okay, so what can we do with the cash accounts? Basically nothing.
Buy stocks, trade options.
Okay.
Right.
Okay.
You could buy stocks, you could trade options, things of that nature.
Okay, cool. Thanks.
Yep. All right, Pierre.
All right, it's a pleasure being here. How's
Right,
everybody
welcome.
doing?
Good.
Okay, my man, listen, I have a couple of few questions for you, but I don't mean to be long, but you said the strategy that you're gonna teach us, it's only how to make 1 point. So with that say, how we gonna go about like the stop loss if we looking to get 1 point, and let's say the market quickly turn against us? How we gonna react to that? Because usually I see the market jumping really fast. It could goes by the time we looking for that 1 point, he already down like 5 point really fast. How we gonna deal with that situation? That's our first question.
All right, so let me answer that one. Okay. Right, so we cover. Excellent question, because I teach you how to take high probability trades.
Okay.
Right, so I'm not going to teach you the trades that you are afraid of. We can see those coming. We're not getting in those. So the trade, even though I want you to go for 1 point, the trade I'm teaching you to get into is going to have more than 1 point in it.
Got it.
The strategy is to get you locked in on, it's like baby steps. So that what the 1 point strategy is to help you build your confidence, right? So that you are confident about what you're doing. The scalping video I'm going to send you by tomorrow, you're going to see I'm talking to you about scalping 1 point, but I took like 4, right? Because I picked the right trade. So when I wanted to show you an example of getting a 1, I'm like, well, I would get the 1, but like it's 3 more right here. So you know how we do it. And so you hear me talk through that. So your eye is on the 1, but if there's more, you're going to take it. But what I'm trying to get you to focus on here. So here's the thing. If I can get your confidence to be like, listen, I know enough. The market going that way, I know I'm good for at least 1 point. That's why I want you to be. I know I'm good for 1, right? But while you're there, you might pick up 2, 3, 4, 5, or you might just get the 1. And that's what I want you to do, so you can get the momentum. I want you to build the momentum, the confidence, the clarity. Then you can move, and you know what I mean, at a different, because everybody's gonna move at a different rhythm as they start to take the scene. Does that respond to your first question? Is that?
Yes, okay. Definitely. Right. My second question, I know, like, if it's the Nasdaq, I know QQQ is the ETF for it. I do play some option. Which ETF goes with the Warsaw and the Dow that mimic the chart exactly the same way? Any idea which one do that for both?
I don't. That's stepping into another lane. I can just say personally, I own some Vanguard index funds that covers that, but that's really not my lane. Like, I asked somebody else for that advice. So I couldn't give you advice. So I don't want to go that path right there. But if you want to look in, I like Vanguard. they tend to got some good index funds and ETFs that will go along with the market in a more conservative and safe way.
Got it.
But I'm not a financial planner. I don't, I don't play one on TV.
Okay. Right. So then my third question, that will be the last one, is I know you mentioned like the futures market is a 23 hours or 6 days a week, something like that. In your experience, I know everybody has their own schedule. They got to choose what time they're going to trade. You just mentioned sometime in the morning, there's a value moving in. Isn't it the same with is it safe to say if you put a position at the close, let's say before 6 p.m. and swing that in the overnight, hoping that will pop in the morning at the open, is that a safe strategy? Like one can, position overnight and cash out right at the open in the morning?
So let's take the word safe off of that, right? Because we don't know what's going to happen overnight. Is that a strategy though? Yeah, right. You would do more of a top-down analysis, which is a different, more of advanced course where you would look out instead of we're looking at 5-minute charts. So we're only looking at the day, but not even the day. We're looking at the most recent couple of hours, so to speak. If you're gonna do something overnight, you're gonna start looking at maybe what's been happening all week, right? Okay. So the same technical analysis, but now you want to look at the week and see what did it do on Monday, what did it do on Tuesday, what is it up, 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 up? Is it down, 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 down? And then if you're taking it on Friday, you're like, well, Friday the closing one. So you're taking, say, on Sunday afternoon, you might be like, okay, all of last week, it was on an upward trend. So you might decide on Sunday when it opens up at 4 or something, or 3, you might be like, it's been an upward trend. I've been looking at support and resistance. I see the range. This might open tomorrow, might continue that trend. But that's more of an advanced course that'll come later on.
Okay, very good. Thank you very much.
You're very welcome. All right. Am I missing anybody? Tammy? Tammy and Rick.
Yes, I wanted to piggyback on him with that as well. The stop and losses. I saw that. I saw some of your videos, and I see that you pick a trade and it's doing what it's doing. Then all of a sudden, it like kick you off. Is that I don't know. I don't know what that is. Is that something that you done to stop your losses, or just kicked you out and kicked you out of the whole trade altogether?
Excellent question. I wanted to be kicked off, right? You
do that on purpose?
You do that on purpose so that you don't give back your profits.
Got it.
Right. So it's a safety mechanism for when you first get in a trade, you're going to put a stop loss so that in case you're wrong and it turns around on you, you don't basically bleed out. And then once you get in the trade and it's working in your direction, you move that thing up to capture your profits along the way. So when it do reverse, you're not sitting back like, man, I was just up 500, now I'm down 2, right? You getting it as it, you know what I mean? We getting it how we live it. As we see it, you like run that, you know what I mean? Run that.
Got that. So now my question is, are you pushing up your stop loss then at that point?
Yes, or down, depending on what direction you're going.
Got it. Okay, that's how that works. Thank you.
Yep. Anybody else? Pierre, you back on? Oh, excuse me, Rick. I'm sorry. Rick was next.
Yeah, I'm not sure if this is the same question Tammy just asked. We're speaking about a 5-minute candle. Is that the same as getting kicked out, or whatever investment you make in that 5 minutes, does it stop when that 5 minutes is up, or do you have to stop it yourself?
Excellent question. They're not related. 5-minute candle is just the time of the price action movement when that candle opened. But there are different time frames. There are 15-minute candles, there are 1-hour candles, there are 4-hour. It depends on what you're watching. We're watching the price action movement in 5-minute increments. So that's all the candle represents. What happened in that 5 minutes? is what we're watching. And we're determining when we're going to get in based on the previous candles movement, because they tell us a story. So that's the one part of it. The stop loss or the risk management tool is because we know it will turn around at some point and we don't know. We're always ready to have that in place so that if we nodding off at the wheel, you know what I mean, we don't get caught out of pocket, right? And it's that I now will put the word safe back in there, a safeguard against you just running through your account because the trade turn around and you don't like, man, do I let it keep going or do I wait for it to come back? Or it's just to be like, you know what? You were not right about this trade. Get out the way, cut your losses, wait for the new opportunity.
Makes sense.
And we minimize our losses, maximize our gains, right? So this is the 10th day of the month. So I've been trading for 10 days. This month I had 9 profitable days and 1 not profitable, which was yesterday. I got stung because I didn't follow none of the stuff I'm telling y'all today, right? Because it's gonna happen. And for me, what I did, I try to tell myself, I'm just gonna use my skill to bounce back. Yeah, that's the story I tell myself. But the reality is I was revenge trading, right? But the more reality is I knew exactly that it wasn't time to trade. I seen the candles. I talked it out loud. I said it. And I'm going to share that video as well in our trainings, right? And you guys are going to have that in your dashboards because it's important. I did exactly what I'm telling you to do. I didn't do it and it cost me. But however, and I could have minimized it. Right, I could have had even a smaller loss, and I still took another trade, right? When you're not right, that's why I said, those of you that have a hard time trying to prove you right and don't like being wrong, you're gonna be out here trying to hotbox with God. And this market is way too big for you. You know what I mean? Your arms don't reach that high. When you're wrong, just get out the way, bow out gracefully, come back when it's a better opportunity. But 10 days of trading, 1 bad day so far doesn't outweigh, you know what I'm saying, what I've already accomplished, and we have more days to come. So why do I say that? So even when I have a day that works against me, I'm not losing any sleep. I'm not in my feelings because I'm confident about what I'm doing. And I know that comes to the territory. And then I take the opportunity to, the terminology you're going to keep hearing me use is reverse engineering. So I reverse engineer. I always go back on my trades and think about what I did well, what I didn't do well. Because everything I do well, I want to keep doing. The stuff that ain't working, I need to make an adjustment or I need to stop doing it altogether. And that's how I'm getting better and better. Just like I know right now, just as a solid rule, that I shouldn't take no more than 3 trades. Because historically, if I take more than 3 trades, those are non-profitable days. And all of my profitable days have happened mostly in 1 trade, maybe 2. Today's trade took 1 trade. Now, how do you get like that? It's because you focus the rules I'm going to give you, the blueprints I'm going to give you, high probability trades, right? So not the one you think going to happen, the one you kind of look like it, the one that's clearly going that way. It's almost like the car taking off and you got to jump in when the door opens. They didn't stop and wait for the dough. You trying to run and be like, hold on, wait for me. Dive in, go a couple of lights and be like, whew, all right, I'm gonna get out right here and take my bag with me. You know what I mean? We're not gonna get in when the car is sitting still because they may hit reverse and go the other way. I want to make sure that that's where you're going. And then I'm gonna go on and dive through the window. All right.
Appreciate it.
Back. Oh no, who was next? Was it Pierre? I only see one hand up. Or if not, of anybody else.
All right, so can you explain about the MACD?
What part of it?
Like, what is the MACD?
We're gonna go over that. We're gonna go over that in the challenge, but the MACD is basically a signal indicator that gives you it's like an opportunity to see when the momentum is changing. So it's just a simple crash course when the MACD is like divergence, convergence, right? When they cross over, when the MACD, when those two lines cross over, that's a signal that the momentum is changing. So you use that information along with the other piece of information to determine, should you stay in this trade, right? Or should you, you know what I mean? Or get out of this trade, or get in this trade, or get at this right time based on what's happening. So that's one way of seeing the difference of the momentum, which direction the momentum is going. That answer the question? Okay. All right. Anybody else? And I recorded this, you guys, and I'm gonna go ahead and I'll definitely make sure you, it'll go inside the 5-day EI, the 5-day Facebook group for anybody who wants to go back and look at it later.
Thank you. I was just going to ask that too.
Yep. I know how we do it. Okay. So it's about an hour and 15 minutes. So I don't want to hold you guys up. I'll take any final questions, but hope this was helpful. And to get you more confident about where we're going, you can be looking out from this point forward. Look for your emails and your texts where I'm going to give you specific videos that are going to support what you're going to learn in the challenge. Okay. So I know you're going to want to be like, you're going to see a video and then you're going to ask another question. I'm going to say, write them down and get ready for the challenge, because I'm going to put all the pieces together for you. But I know a lot of you guys are like me. You like, okay, I'm in. I want to learn. You ready to start? So with these next series of videos that is going to be exclusive to you guys are going to break down. So just like you asked about the MACD, I'm going to have one on straight on indicators and the ones we use and how we use it. I'm gonna have one specifically on scalping. I'm gonna have one specifically on risk management. I'm gonna have one on the symbols. Like, so that way, when I go through the challenge, because the only thing that make you unsure is unfamiliarity. But the more you keep hearing the language, the more you the deeper you start to understand, then when it's showtime, you're ready to push play. Now, this is a question that didn't hear people ask, but it came through my inbox and stuff. You do not have to have tasty words to be in the challenge, right? Those who want to get ahead of the game, so after they learn, they want to start applying, that's what that's for. But you will not be using your brokerage during the challenge. You're going to be a student, right? You're going to get the knowledge. We're going to go through presentation mode. It's going to be interactive, and we're going to do Q&A, and you're going to take your notes. You're going to look at the videos that go with it. Then you're going to take all that and apply it to your account. But you don't have to have a brokerage account open to participate. So I do want to bring clarity with that. What my promise is not that you're about to make a whole bunch of money. My promise is that I'm going to teach you something that you didn't know, that gives you an opportunity to add additional income to your lifestyle from wherever you are, as many times your little heart desires. And that's what the promise is. So I got to make sure I keep saying I've been advised by my people. I got to let y'all know that I ain't a financial advisor and I don't play one on TV. It's a new lane for all of us though, right? But I'm very excited to lead the charge. So Pierre, do you have your hand up before we go? I don't want to leave you out.
Yes.
Okay.
Final thing is, do you trade the first 5-minute candle at the open, or you just wait for it?
You know, as a rule, I don't. But man, there have been times that I couldn't help myself and I got in on it. And I would say, as a rule of thumb, don't, because it's very volatile. So even though it'll look like it's going up or going down, it'll just reverse on you. Because remember, this was everybody jumping on the market. But then sometimes the momentum is just carrying on from the overnight session, and that's clear. And so you get in on it. So you'll see a couple of trades where they were selling off. And I'm more of a bearish person, where I like to sell off, because I know fear, right, moves the crowd. And when people scared, they sell off, and that can go longer than buying. So most of the time I don't trade the first candle, but if it's popping and I feel like it's a momentum is coming from the overnight session, then I will take a shot at it.
Fantastic. All right. One thing that I don't have is the plan. So looking forward to see the plan you have. So I definitely need like a trading plan because I've been doing a bunch of things and I'm not consistent at all. So I'm looking for a clear path, clear strategy to follow. I'm actually, revamping myself. I'm coming to this challenge as a baby, very new, with a clean head, ready to let everything that you have to teach sink in. And then that's what I'm going to do moving forward. Thank you for putting this challenge out there. Looking forward to make good things happen with you, man.
Thank you, my brother. Those are words of a wise man, right? To be open, right? To